want to move on over into the metals here, which also sold off in a big way yesterday. And to help us make sense of it all, I want to bring in our next guest. Traders, we've got Alan Nuckman, the Chief Market Strategist at Agora Financial. Alan, great to have you back on the show. What's behind the weakness?
Good morning, Matt.
Good morning. What's behind the weakness in the metals yesterday?
Well, I think we're seeing a macro asset unwind right now. It's not just the stock market. You're seeing oil, you're seeing metals all drift lower. Now, let's look at the dates here. Part of this is because the dollar has stopped going down, has firmed up. But if you look, you see the highs that were made in both gold and oil were January 26th, the day before the tip top in the stock market. That's when the dollar was at its lows. Right. Since we've had this unwind in stocks, we've seen the dollar, I wouldn't say rally, but it's firmed up. You've seen a little bit of flight in the dollar, which is interesting in these uncertain times and this heightened volatility, whereas gold didn't get any bounce at all. So it was counterintuitive, but that's how the markets acted.
Good morning, Alan. I agree with you completely. One of the more fascinating aspects of this whole global sell-off was the fact that there was no flight to gold, right? It's actually lower in the last week. I found that to be amazing. You know, we talk about risk-off assets all the time, about VIX bonds and gold. Well, gold didn't participate at all. Give us your thoughts on that.
Yeah, that was amazing to me. And sometimes it's equally as important what a market doesn't do as to what it does do. Now, gold and oil obviously had been tracking higher. We had a $100 move straight up in gold, and they needed some unwind. So I think it probably is the psychological impact and the financial impact of the stock market having such a sharp drop is, as a trader, I don't care what I trade. I'll trade any market there where there's opportunity as long as I can get in and I can get out and I can control my risk. Now, I think gold and oil got beat up a little bit because people had money in stocks and they needed to kind of shift some of their asset allocation and stop the bleeding. So I don't know for a fact, but I would imagine that there were probably some margin calls and they had to be met. So if they had anybody had any long positions in oil or gold, guess what? They needed to get that cash out.
All right, Alan, let's talk a little bit about silver, because with the decline that we've been seeing in the gold, we've watched silver now back down below 17. I'm curious, is this a dollar story as well, or is there something else behind the recent weakness?
Yeah, I think it is just simply profit taking. You know, the 17 is an important pivot. Silver had a big move as well. And so it's really this dollar. You know, we've had this firmness in the dollar over the last few sessions, and that happens in uncertain times. You know, the dollar is something that people will gravitate to, and that's what's held it firm. So if you look at the euro currency in comparison, the euro currency was down below 123. We talked a couple weeks back about 125 was kind of an interesting level. That was the upside target. It could go higher in the euro, but you know, I didn't see there was a whole lot more potential there. So, you know, this dollar at the 90 level, let's see what the next move is. It's interesting to see that we had a key reversal in bonds on Monday, whereas we made new lows and a higher close. Finally, a flight to quality there, but that's evaporated and we're down near the lows again in Treasury. So what is the impact going to be on the dollar? I know your previous guest, Don, was talking about the interest rate hikes and what impact that has on the stock market, but most importantly, what impact does it have on the dollar, and how does that affect, you know, metals and other commodities that have rallied significantly because of the dollar decline that we had in 2017?
All right, Alan, let's switch over to copper. It's really a very similar story, right? The effects of the firming and raising dollar are going across the metals complex. Copper also struggling down, now trading about 308. Is higher rates or is the higher dollar, what's affecting copper more?
I think it's very much in the same boat, like you just said, as gold and silver. You're seeing an unwind there. We're down to the lowest levels in gold, you know, since the first week of January. So it's just a macro metal decline here. And we went below the 310 level, which is important in copper. Now, let's see if we can hold $3. So it's really about price performance, and look and see how we act at levels or react at levels, and see if we fall or follow through. As long as we stay above 3, I think psychologically copper should be solid. Let's see if this decline is a buying opportunity. Overall, the trends are still stronger in the metals, and the trends are still lower in the dollar. So let's see if they revert back to norms here. I would like to look at things on a weekly basis, especially with a week like we've had this week, and see where we stand. Like you talked about, it's interesting. It is so interesting that the metals are down significantly this week when we had that heightened volatility. Let's see where we are by the end of Friday, and see if we get any sort of bounce or recovery after this pretty healthy decline.
Yeah, I agree. Alan, with the increased volatility, we've been seeing some of these moves on the intraday. You've got to take a step back. You've got to look at the forest, not so much the trees.
Right.
You know, I'm thinking about stocks in terms of the fact that they seem to be very concerned about inflation and these higher rates. Now, metals, not so much so, it seems like, but traditionally, how do the metals act in terms of a higher rate environment, higher inflation type conditions?
Well, you would think that would be a positive for metals. So there's another strike. You know, we had the volatility, and, you know, you got this increased fear of inflation, and they strike too. So, you know, you would think metals would react positively. We're not seeing any of that action right now. So let's get into the big picture, because I think that's what's driving the overall markets is the macro. And the stock have started to stabilize. Now, we did have a key reversal in volatility on Tuesday where we made new highs at 50 and had a lower close. And so I think that short squeeze in the VIX is over. Let's see where we are by week's end. But then we also had a new lower low yesterday than we did the day before. So signs are of stabilization in the stock market. Yesterday, we built on the gains from the reversal we saw in stocks on Tuesdays, gave them back at the end of the day, but did take out the highs from Tuesday. So there are a number of things that are positive, you know, for the stock market to stabilize after that you know, unkind unwind, I guess is what I would like to say, where we went straight down for 6 sessions. But we did have 2 days of stabilization so far. So let's see where we finish out the week. But I think that could help out the other markets as well once stocks stabilize, because it's been an asset reflation over the last months and years. Let's see if that continues after this profit-taking pullback, as that's what I view it at now. I know other people have their own opinions of maybe the Fed is you know, not going to be able to manage this situation, but I'm always going to have confidence in the Fed, because what they've done over the last 8 years has played perfectly as far as the stock market rise. They've played their hand as best you possibly can, and I don't look for that to change anytime soon.
All right, Alan, one last question here, and it has to do with the range of gold, right? You can go back as far as 2012, and you're looking at a range between 1,400 and 1,100 in gold. What is it? What's the impetus that can get gold out of this range? Is it $1? Is it a dramatic move in the dollar? Give us your thoughts on what can get us out of this range.
Wow, that's a tough question. We're looking for the catalyst, and you know, I thought we were going to make an attempt on 1,400. Like you said, we've been in a range. Now, my job is to identify the range and identify the breakout. We don't make money by actually predicting what's going to cause it, but I'll know when I see it, and I'm just going to sit back and wait for that breakout to happen.
Fair enough.
All right, Alan, good information there on the metals. That's Alan Nuckman, the Chief Market Strategist.